Traders, welcome to this lesson. We're going to learn about the T-line supreme for TradingView. I've got the indicator applied to the chart, and one of the things that you'll notice with the T-line is that currently the bands that we are using to find the extremes are static. So with those static bands, I want to kind of show you a different way to employ it. Now, most of you are trading the T-line supreme on a basket of 5 to 15 stocks and on trading time frames that are typically 2 hours down to 15 minutes. So let's get rid of a couple of the setups on the bar here, and we're going to take a look at just the T-line supreme to look at how it's used. Now, I want you to note at the bottom of the chart I've got two additional indicators. I've got the base RSI, and for this one it's set to 8. Okay? Overbought at 79, oversold at 21. For those of you that have gone through the RS Trader series, that will give you an example of how to use that and employ that with your extreme turn. Now what I want to do is I'm going to come over here in TradingView. I'm going to move that pane down, which brings to the top the average true range. So the ATR right here is what we want to look at, and I've got the ATR set to 14 periods. I typically use 7, but here I'm going to go out to 14 so it reduces the smoothing. And then we can go with the SMA as far as the simple moving average. Okay, so average true range just gives us an idea of what is the average range of the last 14 bars in this particular series. So I'm in the micro S&P 500, and you'll note that the average true range right over here, pull my cursor in, you'll see to the right it's 32.41. So that's 32 points, 32.5 points. Okay, now let's come in here and let's double left click on the T-line. I want you to note again, T-line supreme, a couple of things. Number one, the mid band is going to change colors based on trend direction. A bullish trend can be blue. You change that mid band right here in style. Right there's your mid band plot. You can also increase the size of the band if you choose to. And then obviously it's red when it's bearish. So let's increase the size of the band here. So really basic. If the mid band is blue, you get a close above the band right here. Mid band goes to blue, then look for long entries. And obviously if we get an extreme turn in RS trade series sell against the outer band, that will be a counter trend sell. If the band is red and we've got closes below, you'll see then we tend to get a bearish move. So remember the if-then thought process and the base tendencies. Now let's go back in here. Let's take a look at the inputs. You'll note that the default is set to 13. 13 is a Fibonacci sequence number, and that's where we come out with on the fault, or the default. The Big Mo channel width is set to currently 600. And then you'll note here the moving average type. So keep in mind, typically the default settings 13, 1, and 300, 13, 1, 300. If you come in and modify these on your own as you're doing some testing, go ahead and play with it. Find what suits your needs. But if you're in the live room or you're watching training videos and you see that the Big Mo bands are set up at a different spot, it's likely because you've modified the parameters or you're on a different time frame or a different trading instrument. All right, so we're going to go with 1, which is the simple. This is the exponential moving average, volume weighted, and then weighted moving average. Now let's go ahead and click cancel. I want to come over here to where the final tick on this particular time frame and chart hit. Okay, so you'll note at this time the average true range again was basically 33 points. Each one of those points in the S&P is worth 4 ticks. So if we come in here and we want to get really granular, we would go 33 points times 4 ticks per point equals 132 ticks. So if we take the tick value, and that's in the futures contract, if we're stock traders, it would be the number of pennies or cents. If it's foreign exchange currency, we would look at the number of pips. So the smallest unit of movement, 1 pip, 1 tick in futures, and then 1 cent in a stock. So let's take the 132. Remember that. come back in and double left click this, and you'll see right now it's set to 600. So now I want you to go in and just take a look at your chart. And again, try to find stocks that you're familiar with, equities you're familiar with. Again, a basket of 5 to 15. But you'll note this catches our swing highs and lows pretty nicely. So let's take 600, okay, which is the value that we've got it set, and we want to divide it by that 132 tick number that we just arrived at. And you'll see that basically that's 4.5 times the average true range of this market. Okay, so if that setting's good to you, then you can go 4.5 times, or let's just go 5 times. So 5 times the 132 would be basically 650. All right, click OK. Now let's tighten the chart down, and I want you to look historically. And I just want you to note, in trending conditions, we have a bear trend right here. And then price pops up and we put in a double top right at that resistance band. We then put in another test at that resistance band. So it wasn't an extreme move. Let's look at the value of the move. Go right here and you can look at your date and price range. So from the swing low here, price moved up. You see 9%, which was 255 points. So again, think about 255. That's about 10 times the ATR. That's a pretty significant move. And yet the bands basically contained price action, offered really nice qualified sell signals there. Then as price rolled over, we get back into a bear continuation pattern. You'll note that when price is always below, the open, high, low, and close of each candle is below your mid band on the T-line, we've got a strong bear trend. When price is below, bear trend. Notice those things. Then let's take a look at lowest low to this swing high, 324. Okay, so we rally. Again, this is a volatile time in the markets right now with the coronavirus pandemic. So as things have settled down, if this is a year or two later, you note that these might have changed, likely will have changed. Anyway, we were able to travel from band to band. So this width looks really nice at this point. Now let's go backwards and let's take a look at a period of bull continuation. Well, that's the MES, so we'd have to have a continuous contract. Okay, so that'll kind of give you some evidence there. Now let's say that we want to switch to a different market. Let's go to crude oil. Okay, so I pop it over into crude oil, and I can immediately notice that, again, it's providing some really solid signals. Right here, we have an extreme move in crude. We didn't quite get to the outer band. Let's go down and look at our ATR. It's $1.29 on the 2-hour, which is 129 ticks. So we'll take the 129 ticks, we'll multiply that times 5, which comes in at 645, and 645 is right about where we are. So let's just come down to 550, see what that looks like in crude oil. Beautiful extreme right here, double bottom, buy. Extreme right here on a retest of the previous support, buy. We roll back over, we see a double bottom here with another test of that support level, buy. Here we hit the outer band and we retest support. We get resistance right here at a double top. I'd kind of like to see it testing that zone, and then right here we pop back up. So in crude oil, maybe I come down to 4 times. Let's go to gold. Okay, gold you see a little bit tighter. Again, the primary thing I want to do is I want to note how are the bands containing what is the current price action. So let's look at gold. Right there it's 12.2. That's 12.2 points. And then again, we're up here, we're at basically 4 times. So it looks like 4 to 5 times the tick value in each of these markets could be a nice setting. All right, now let's go take a look at a couple of the equity plays. Let's see here. Go down to the watch list. Now we're still in a 2-hour chart. Let's go to the SPY. Now you'll notice here that the value of the stock is $280. The average true range down here is $4.51. So again, that'd be 451 pennies. So if we take the 451 times 5, we'll just go 450 times 5. It's going to come in at 2250. So I can come in here, modify my band, 2250, hit OK. And now you see that it looks similar to what we saw previously. We don't spend a ton of time at the outer lower band, but it is containing price the majority of the time. See this double top right here. Let's go back and look at some of the history. Okay, now let's go on the spider. Let's go down to a 15-minute time frame. Obviously, if I go to a 30-minute as an example, okay, so you note here, beautiful double bottom here, beautiful price containment right here. Spends a lot of time in the sideways trading right around the mid band. Beautiful double top right there. So I wanted to give you an idea of the different stocks. Now when we go out, let's go look at Amazon. Now again, although Amazon's at $2,000 a share right now, average true range is $10.39. Yeah, let's just call it 11 bucks. So we'll take our $11 bill, which is 1100, and we'll multiply that times 5. Come in here. That's 5,500. And you can see that we acquire the same basic look on Amazon. So that's just an idea of how to employ that and modify it. Hope that helps you. Be sure to email me with any questions. We'll see you in our next lesson.